Christmas is around the corner, so let's see if the forex market has any gifts for us. Now, if you're new to the channel, my name is Nick and I'm a top author on TradingView with over 260k reputation points, and every day I share a lot of free education and analysis for all of you on this channel, so make sure that you subscribe and I will see you on the chart. In today's video, I want to speak about gold. Now, why do I want to speak about gold? Because at the moment, we do have quite interesting price action and structure. So what I will be doing is, as usual, providing a complete multi-time frame top-down analysis, starting from the higher time frames, going down then on the lower ones. We will also check what we have from a COT perspective, so commitment of traders, which is basically what hedge funds and the non-commercials, so the biggest speculators in the market, are doing. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for a potential move here on the pair. Now, starting from the monthly time frame, what we can see is that the market has just created a very strong impulse to the upside, followed by this correction. Now, in general, when you have an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse. And if we do that, we can see how we have a 0.618 Fibonacci retracement lining up exactly at this area that we did expect the market here to test and reject to the upside, once again here test and start to reject, and we can expect the market to print new all-time highs and obviously reject at this point the 50% of the Fibonacci taken on the monthly impulse that we are currently testing. So on the monthly, everything seems very bullish. Dropping down on the weekly, what do we see? Now here in the weekly, we can see that in all this impulse to the upside, there is one candle not related to the move, which is exactly this red candle here. And when you have an impulse with one candle not related to that move, that candle is actually a strong structure area. In this case, since we are approaching it from above, it is a strong support and demand area that we do expect this market to reject to the upside. And in fact, we can see how the market has already started creating this green candle here, which is clearly a rejection candle. Just a quick thing, make sure that you like, subscribe, and let me know in the comments below any suggestions for new videos. Dropping down on the daily, what do we see? Now here in the daily time frame, we can see how the market, in creating this move to the downside, also printed this M pattern. Now in general, after the creation of an M pattern, what you want to see is the market create a move to the upside to go and complete the pattern itself at the previous support turn resistance. So here in the daily, we did expect the market to provide a move to the upside to go and complete the pattern at this previous support turned resistance. Now, we can also see how we got this deceleration with potentially also an accumulation zone being created inside of this area, with the market creating sideways price action. Then we got this stop hunt with this rejection lower. Obviously, a lot of people got trapped in shorts when the market created this move to the downside, or they were in longs and they had their stop losses below this area. Obviously, this move to the downside liquidated all those short positions, giving the possibility to hedge funds to actually start buying, and obviously the market immediately created a strong rejection to the upside. Now, let's go and see what we have from a COT perspective. Actually, before we check this, one thing that I wanted to let you know is that at the moment we are running a massive discount and promotion for the mentorship program. You have a huge upfront discount, but also you have the possibility to get a full refund of the mentorship program price credited directly in your trading account, since we have partnered with the forex broker Blueberry Markets. So it's a very interesting promotion. I really suggest that you go and check it out. The link to the website is in description. Now here, if we check out the COT data, what do we see? What we can see here is that lately net positions have been growing. We went from having 168.3k net positions with 293k longs and 125k shorts, all the way down to having 95k shorts. So shorts definitely got decreased and longs actually got increased from 293k to 298k. So we have thousands of shorts getting closed and thousands of longs getting opened on gold from an institutional perspective, with net positions getting increased. So overall, we can expect the market to provide a rejection higher that we already wanted to see by looking at the monthly and weekly timeframes. Now, here in the daily, another area of structure that we must identify is this zone here, which was acting as previous support. The market then broke it to the downside, started acting as resistance here, again resistance and again resistance. But since the market has now broken it to the upside, this previous resistance is now turned support here. And as we are testing this previous resistance turned support, we do expect the market to provide a rejection to the upside and potential completion at least at the neckline of the daily M pattern. So how we will be approaching this potential short-term longing opportunity here with students. Now, as usual, we will be reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best timeframes from a directional perspective. However, when it comes to confirmations and entries, the best timeframes are the intraday timeframes, so 4 hour and lower. Therefore, with students, what we will be doing is monitoring price action from an intraday perspective instead of this area waiting for the market to shift from an intraday bearish market as we have right now to an intraday bullish market. And if the market will shift from an intraday bearish to bullish market, at that point, we would be adding gold to our watch list. And as soon as the market will provide to us one of our valid entries, we will be looking for a potential long with a good risk to reward and good probabilities at that point for the move to the upside and for the market to potentially complete this M pattern at the neckline. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you. You can also go and check out the mentorship program. The link is in the description. It's a very complete program. First, you learn all the rules of my rule-based strategies. Then every single day you get a new daily market breakdown showing you how to apply the strategies in live market. And you also get your questions answered every day in the daily Q&A session. So it's a very complete program. I really suggest that you go and check it out. The link is in the description and I will see you in it.